Hello and welcome to the KE Report. I'm your host, Shad Markwitz, and today we're getting an update from Bob, also known as BDC, on the KE Report, longtime listener and contributor, and also technical analyst that runs Fibonomics.com. And we'll put a link to Bob's site down below. And Bob, it's always great to get together with you and just look at some of the charts. We were talking off mic about the big run in precious metals. And first up to bat here, we got a chart of gold. Just for clarification, this is spot gold for folks. What he has shown us here on the technical chart for the yellow metal.
Well, it's quite interesting. The last time we talked, this was what we call a possible Gartley turn, and it came here, came here, came here. Now it's broken through. So bye-bye, Mr. Gartley. I've set up an ABCD target, which in this case is around 3,600, and your A, B, C. I used the second one here. And like that, it's pretty straightforward. We broke through 3,500. So here we go. I have a sneaking suspicion we may be reaching a top for some kind of a pullback, but this has got so much momentum, I don't like to even guess, tell you the truth.
Yeah, there just really is a lot of momentum in the precious metal sector in general. And I guess that brings up the good point that the next chart is the gold equities with GDX. And so let's have a look at what the gold stocks are doing in relation to these higher metals prices.
All right. Well, here's GDX. Now, this happens to be one I did a while back, and I've just updated it recently. And there it is. There's the old 4578 from 2020. And then we had our breakout. I want to point out something quite interesting here. This is March of this year. See how it tickled up? And then they often do this. They tickle up and then they give you a nice pullback. That's usually a beautiful buy point. In this case, it's the Trump tariff buy point. That's the April 7th low, the monster low, and it's just everything does almost everything in the markets generally hit April 7th and boom, 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 still going up. Everything's going up, and gold and silver and a lot of other stuff is going up too, including the GDX. One interesting thing here, which I'll get into a little later, is that we still see GDX at a muted level considering the price of gold. If you look back years ago, 10, 15 years ago, if we had gold at these prices back then, this would probably be in triple digits.
Yeah, I think it's a great point. I think the high back in 2011 was around 67 for the GDX, and it's still not even at that level yet, even though gold is almost twice as much. So, but still a nice looking chart for GDX here. So, I guess moving through the precious metal sector, let's have a look at silver.
Yep, and here's silver long term. This is similar to the chart we had last time, except we've gone beyond the one-to-one ABCD, and now we're meeting significant resistance. Now, what do I mean by that? Here is a Fibo ladder, and a Fibo ladder is simply the box all the way up to the top from the bottom. I've eliminated all the other ones in here. The only thing left is a 78.6%, which I call the Gartley line, but in this case, it doesn't have significance. However, when I do an ABCD plus 27.2%, I get 41.52. And the same thing we had last time. But now it's becoming more serious because we're just about there. And let me look right now. I'm going to give you a current price of silver is, or not, it's not exactly current. This is the high of the day, 41.46, and this is spot. These are both spot. So we're very close. We're within 6 cents of that target.
Well, Bob, when you say this is a Fibo ladder, for people not familiar with charting or the lingo, you're talking about Fibonacci levels. And so what happens is
Mm.
on a chart, you can lay out these different levels. So you stretched it out there, and that's how you came up with the box. And then your ABCD target, you add 27.2% to it because that's an
Mm.
important number. So maybe just explain that for people.
Okay, the 27.2% is a very common extra push. Sometimes it has to do with this kind of thing happening before. It kind of allows for this kind of thing, although this one was covered. You'll have gaps. There are various reasons that it happens, or it could just be a momentum push. And the other side, the Fibonacci ladder is a static ladder. They just sit here in this box, and you just keep on going up, click them off, click them off, click them off. And now we've reached the top one until we reach the very top. These these Fibonacci levels are dynamic. These have to do with the current price, the actual pricing. So there is a difference there. These are very helpful, but these are the ones that this is the down and dirty one, but they're all important.
Okay, appreciate you breaking that down just so people have some parameters there for what they're
Hmm.
looking at. And now I think we wouldn't be complete if we didn't look at the silver stock. So I think you got a chart of SIL, the ETF of the big silver
Oh
producers.
yeah, this one's very current. It's 11:36 this morning Eastern time, and this is an interesting one I've been noticing more and more. Usually, when I do an ABCD with an extension, the extension is usually a 382, which is a Fibonacci, a 618, which is Fibonacci, and the 27.2 we just went through. But I've been finding more and more that we get an exact 100%, which means we get the AB, CD, and then you tack on another CD. And it's been happening a lot. So I included it here, and look how close we are. Look how close we are to the reality. So it's quite interesting.
Have you ever seen something go beyond even that where it just blasts up to rarefied air?
Oh yes, but not that often, not too often. When they do that, they still. I haven't seen one in a long time, but they actually have some of these charts where they have 2.318, 2.618, or yeah, 382, 2.618, where they will still use Fibos, but they will tack on a full, in this case, a full CD. But this one here is interesting because I'm finding it happen a lot, an awful lot. So that means things are stretching more volatility and things like that. And that's why, let me just go back here real quick. Is this the one? This the one? Oh, no, it's the next one. Is it? Yeah, yeah. Okay, let's go. Let's jump right to the dollar unless you have a question on that. Do you have a question on that last one?
Well, I just had one question. If you go back to the other charts, like the SIL or any of the charts, it looks like they're all approaching the upper boundary here. So, in general, are you expecting gold, silver, GDX, and SIL to almost hit a interim peak here then? Because it looks like they're almost all to the target levels.
Well, I wouldn't be surprised. Let's put it that way. And just noticing this, it's not that they're struggling; it's that they're just not going any farther. They're getting not long in the tooth, but they're high. They're just very high. Right now, the gold is right at this moment at this is spot 35.67.12. So as I had 3550 to 3600, so we're right in that range, and I wouldn't be surprised at all. And the thing about it is, before we continue too far, I think folks that have portfolios and they don't want to sell, there's a tax problem, they like the dividends they're getting, all that kind of stuff. They should consider buying some of these hedges, which are out there. It's just like insurance, and isn't that expensive. And it sure does help if you take a 10 or 15% drop in your portfolio, and you've got something that catches half or two-thirds of that amount, maybe the whole thing. So you might consider these hedges, one of these hedges.
That's a great point. You may not want to get rid of your long positions, but you can put on a
Mm,
short position or an inverse ETF just to, you can use
mm.
options or an inverse ETF just in case you hit a peak out point. But let's jump into the dollar chart that you have prepared for us and have a look at the greenback.
Okay, yeah, this is a dollar. It's a near term. It's a 4-hour chart. The interesting thing about this one is that it's an expander. Here's your A, here's your B, your C, your D, and then your E1, E2. And I've used a back box to determine a realistic target point, X, Y, Z. And again, I add 27.2% because you have to. In a back box, you must add to it because it's just the box. This is the box bottom, this is the box top. So that's the key about a back box. So you must add something to it. And a good standard is the 27.2. It's the one you start with. And over here, you'll see that this was done at this morning, and it was most of this was worked out last night, and I didn't have time to work out the ABCD here. However, I did just do it quickly, and the ABCD 1-to-1 comes out about 99.2. So this is a pretty good guesstimate number here. So the interesting thing also, in addition, how can the dollar rise and gold rise at the same time? In the old days, that was always a threat because what it means is some kind of an economic collapse, you know? I mean, people want to put their money in gold or people want to put their money in the currency, but everything else goes to hell. But that's not the case. And that's why I want to get into the next one, unless you have some questions here.
No, let's get to the next one because the next one's really where people store their currency, their money, and there's a
Mm-hmm.
different flavors that you have laid out for us.
Yep, let me get back to the top here. Well, Ethereum is the most popular crypto at this point in time. And I use that as the bellwether for the rest. And just as an interesting aside here, this is a fractal. I have an A, B, C, D, common E, A, B, C, D, common E. Now, in an expander, the E is the one that goes the other way. So I'm thinking, well, let me continue on. This is the dollar long term, and you can see it's got some pretty good support here. Normally, this might be thought of as a bear flag, but usually the bear flag would be here. When it continues up like this, it actually is starting to act as support on the bottom side rather than being a bear flag. And it has pretty good support right there, right now, as we saw by that expander that I just did. And then we have gold again. Now, this is the very long-term one. I think we did this once on the show, but it had a lot more other stuff on it, but we've blown through the other stuff. And here we had a target of 35.50, just about 35.50, which is the A, B, C, D plus 50%. And this goes way back to the turn of the century up to this B point in 2011, and then down to that that long cup bottom in 15 and 16. And then we do the ABCD, add 50% of CD, and this is what we get. But we're up here now. We're going a little bit beyond it. So, you know, this is a dynamic thing, and it's happening as we speak. My point is, these three things represent monetary primaries. You have crypto nowadays, and so many people are in crypto that it is a monetary primary. And then the dollar obviously is a monetary primary, and gold obviously a monetary primary through the millennia. Gold, interestingly, is its own collateral. Now, some people think that there's some kind of collateral behind crypto, but I don't know of any other than intellectual. But it's still, this is the ultimate fiat right here. There is nothing backing it up except intellectual, plus people like it, and that's where they park their dollars. And then we come to the dollar. How often we see people, excuse me, and just recently, Rick Rule said that in 10 years, the dollar is going to be 25% of its value. Well, Rick, I beg to differ. You see, too often we think of the dollar as a simple fiat currency. However, it's the United States dollar, right, Shad? USA?
It is. Yep.
Okay. How much money, how much land does the US itself hold? Bureau of Land Management, the whole thing. What do you think?
I have no idea how to quantify it, but I know it's a lot. But I just want to throw something else at it because you brought up Rick's interview that we had over the weekend. He was
Oh,
talking
okay.
about the purchasing power of the dollar, not the dollar index. So just a
Oh, oh,
clarification.
oh no, I understand that. I'm sorry. Yeah, you're exactly right. I didn't know it was your, I didn't know it was your interview. I just remember somebody that Rick talked to somebody. But no, no, I'm not arguing with them or anything. My point that I'm making that people, and including me, I picked up on this idea over the weekend, over the Labor Day weekend. This whole thing was done over the weekend. And this whole idea, I said, you know what? This dollar has never gone down that much. These are big margins here. And if you look at the percentages, yeah, 70 to 120, that's a big percentage. But when you consider nothing to something, it ain't much. But underlying the dollar could be the collateral, could be the ownership of land, let's say, and that would be in the quadrillions. So 38, $37 trillion, I think, is the latest. It's a huge number, but we're going to get by if we want to. The big thing is it's the money mavens who control the dollar, the Federal Reserve, and that kind of thing. They will determine. But you know something, Shad? I think they know all about what I've just discovered over the weekend. These are the three monetary primaries. And I don't know if they had something to do with crypto 15 years ago or so when it started showing up or not. They may have. And gold itself, well, that's obviously been around forever. But the dollar is a useful tool. And if they want to keep it around, there's nothing else that comes close. The structure is there, the history is there, the history could be corrected, and I maintain that it definitely has collateral.
Well, Bob, just as one final thought, if you scan down to the chart of the gold here underneath the dollar, that's a longer term chart, like you say, going back to the
Mm.
turn of the century. But keep in mind that I think the point Rick was making was purchasing power is not the same thing as the chart of the dollar index. And so the
Mm-hmm.
purchasing power has fallen by about 95% in the US dollar. So if you think about gold and we look at the
Right?
yellow metal, in 1971 it was $35 an ounce. Now it's
Mm-hmm.
$3,500 an ounce. So what's
Right.
happened is the dollar has fallen in purchasing power by almost 100% during that time period because that's the gold is the inverse reflection of the loss of purchasing power. So I think the bigger point is the dollar index may whipsaw back and forth, and that's how it
Mm-hmm.
relates to other currencies, health of
Right.
the U.S. economy. But gold is showing you what's actually happening to your purchasing power in fiat currencies. And so gold didn't change. It's a rock. Some people call it a pet rock, but it's on the elemental table. And if it was $35 in 1971 and now about 50 years later it's
Yeah.
$3,500, that shows you how much less your dollar buys now. So I mean that's the key takeaway from this is the gold
Well,
is the haven from the loss of purchasing
I
power.
agree. I'm not going to get argumentative here, but the $35 was by statute too. The thing is, once they released it, it popped up to about $144. But the thing is, my point is that it's whatever we make of it. And I've maintained a while back, I said a $3,000 gold is fair. Let's say $3,500 gold is fair. $4,000 gold is fair. We could stop right here and go to my trinary monetary method, which I use the term fractional reserve gold, which I did now that we have AI, artificial intelligence, I checked it out and oh gee, the goldsmiths used to call it fractional reserve gold 200 years ago. I didn't want to get caught with the goldsmiths. But the thing is, if we wanted to, there's more than enough gold to create a fractional reserve gold standard and with a non uh, unchanging future, not futures, but an unchanging gold future, non expiring gold future, which if people really wanted gold, you can go out and get it for them, but otherwise it's standardized for financial purposes. Now, I know Rick said, I don't know with you, but a while back he said, no way, no way are the government's going to allow something that they can't jimmy to come into existence. But we're also in a new era. If we want to, we can have this dollar. We can have a brand new currency, the U.S. dollar, new edition, and it can be backed up, we say, by the collateral of the United States and our intellectual abilities. And we can do these things. It's up to us and the money mavens that are currently control the Federal Reserve. But that's my point about this whole particular uh, posting that I did here with Ethereum, the dollar, and gold. So anyway, that's just an idea. I think if we want to do it, we can do it. And we really have to get beyond these wildly, uh, violently markets that there's no stability. You can't trust things, and that's what happened to the companies, to the gold mining companies, as you pointed out a while back. They had to price at such a low level just in case it went down there. The price of gold. And if we had a steady price of gold, say at today's level 3,500, I can guarantee you that the price of silver are going to go up above $200 and get back to the old 15-to-1 silver to gold ratio. That's what would happen if we had a truly stable currency and gold. That's what I think. Anyway, that's what's in my mind.
Well, we'll keep our fingers crossed that cooler heads prevail and we come up with a good system. But for now, I really appreciate you, Bob, sharing the charts
Can I show
as you
one
saw them.
more?
What's
Can I
that?
show one more? Can I show one more chart?
Sure, let's squeeze it in there. Yeah.
Okay, this is the Qs, the NASDAQ. I just wanted to show it because it looks like we may have a top here. And on this particular chart, if you look, by the way, this goes back to the monster April 7th date, and you can see what happened. This is obviously a head and shoulders top, and it could go down. However, I did some math before we came on, and 553 plus or minus a buck for the Qs may just hold. If it doesn't, there's a 5% chance that the 23.6 will hold, about a 35% chance that the 38.2, and then nearing a 60% chance if it goes that far down, that'll hold. But that would all be in 1 year. But I thought I'd pointed out that these markets may just continue going sideways now and then up. I just don't see anything that would hammer them unless somebody actually does it. I wanted to get that last bit in there.
Okay, appreciate you showing that on the really a reflection of the tech stocks index, with the Nasdaq. So appreciate you walking through the triple Qs with us, and appreciate you walking through all the charts. For those of you listening in or watching, if you want to get more information from Bob and what he does, definitely click on the link below that takes you over to his site, Fibonomics. And Bob, until next time, looking forward to our next conversation.
All right. Thanks a lot, Chad. Really appreciate it.